So we can begin now. Good afternoon, everyone. I, Dr. Priti Sharma, Area Chair Finance at IMT CDL Ghaziabad, welcome you all to this post-budget panel talk. So today we will explore the key insights of the budget related to taxation, market impact, impetus to these several industries. And we have with our panel of experts, I am honored to welcome my panel of experts, Mr. Tanwir Alam. Mr. Tanvir is a senior finance professional and an entrepreneur of a leading financial planning firm, uh, FinCard. So FinCard provides the comprehensive financial solutions to its client and makes a difference into their lives. So I'm delighted to share that Mr. Tanwir Alam is our alumni, and he has been conferred with Alumni Excellence Award in the area of entrepreneurship in the year 2023. So welcome, Tanvir. I'm honored to have Ms. Shubha Singh. Ms. Shubha Singh is a leading legal, compliance, and finance professional. She has an extensive experience in the legal matters, compliance-related matters. She has an extensive experience in the area of ESG, CSR, debt restructuring, sustainability. So, and I'm proud to share that Ms. Shubha is a league. Sorry. So Ms. Shubha is our alumni, and she has been conferred with Corporate Excellence Award in the area of finance in the year 2024. Ms. Shubha is legal head and company secretary at Jai Bharat Maruti Limited. So welcome you, Shubha. We have with us Mr. Ashish Gupta. Mr. Ashish is a senior technology professional, and he specializes in the area of technology-enabled business solutions. He is senior tech lead at Nagaro, and he is an active alumnus at IMT CDL Ghaziabad. So I welcome once again all the guests. And we must now straight begin with the discussion on the key focus areas of the budget. And this budget has been focused on giving or increasing the disposable income in the hands of the consumer, enhance the growth of India, focus on the employment opportunities, and though the little bit cut has been there on the capital expenditure, but yes, fiscal prudence is still in the focus. FMS talked about infrastructure, FMS talked about the regulatory reforms, and our Prime Minister has called it people's budget. So I would like to know from my experts, what is their view on this budget? So Mr. Tanvir, I would like to begin with you. What do you say? How do you see this budget?
Thank you. At the outset, I'd like to thank you, ma'am, and IMT Ghaziabad for inviting me here. Okay, in fact, in my pre-budget note, I had categorically mentioned few things, and I will just reiterate a bit there. So, you would have heard a lot of headline news that the Indian economy is slowing down, GDP is coming off. So, in fact, if you actually measure GDP using the expenditure method, it's called Y equals to C plus I plus G plus X minus M. And if you further break down why GDP was slowing down, because post-COVID, inflation went up very high, job creation was not there. So the consumption dropped significantly. Okay. On account of poor monsoon, the rural India were even substituting products, okay, because they were not able to consume. Thanks to this year good monsoon, the rural economy picked up. But the urban population was struggling because inflation went up and the disposable income did not go. The consumption was one of the key issues. Now, private sector investment, India currently has one of the cleanest balance sheet, but the capacity utilization was just at about 75% thereabout. So hence there was no sense of urgency for private sector companies to put up capacity, okay, and invest money there. So that was a bit slow. All this while government has been shouldering the major part of the responsibility by doing huge amount of capex and doing a prudent spending, okay. But in the last 2 quarters, that dropped down significantly, okay. And we are more of a import company than export, so our import was very high. And when the duty on gold went off, gold import short very aggressively, okay. So if you look at from that perspective, the GDP struggled. So the need of the hour was to fuel all this fund. And what is very uh, delighting out here is that the government tried addressing more than what we could have thought. Okay, on the consumption side, in my note I had written, we don't need long-term measure at this point of time. We need short-term, immediate measures that will give disposable income in the hands of people. And I was also hoping for a direct tax cut. And what a welcome move! They have really cut. Uh, in Hindi language, dil khol ke cut kiya. Like they have done a very well cut in the tax part. So that will surely boost consumption. That adds approximately 1 lakh crore in the hands of consumer. That's one part. Now, with this consumption going up, it's a vicious circle. We feel that the capacity return gradually will go up. And then to address that portion of the budget, they have also addressed new industries like your batteries, iron cell, EVs, those segments, because there we don't have constraint of capacity. Okay, or we don't have overcapacity. There additional investment can come in. Very well understood. And the government had reinstated their stance on capital expenditure. And more so on the last side, if you look at, they have given impetus to leather and footwear, which could go into export. Okay, and these industries will create large amount of job. They have given impetus to making toy a global toy manufacturing hub. So I think the overall impetus out here to actually boost export is a holistic approach where the government has taken to ensure that GDP comes back on track. So if I have to really rate this budget, I think it would be one of the best budget of the current government in the last 10 years that they have seen, more than 10 years.
Yes, yes, I definitely agree. And taking the, rather than being on the driver's seat, they are enabling now the growth by
Right.
transferring the power in the hands of the private sector, in the hands of the consumer. So, Shubha, I would like to know your take on this budget. What do you see? What are the focus areas?
Yeah, hi, good afternoon. I'm happy to be here today and thank you to IMT CDL. Actually, I feel that the FM has introduced significant reforms which are aimed at stimulating economic growth, just like Tanvir said, enhancing the spending power of the middle class, which was very important, and promoting inclusive development. It is like a back to the basics budget with focus on middle class growth, infrastructure, which in turn will, of course, boost consumption, increase disposable income, and maintain physical discipline. Government capex has been reduced from previous years. There's a shift towards private sector participation now. If I talk of some particular sectors and give you some sectoral highlights, MSMEs, they've got a lot of growth incentives, access to credit, and there has been a change in classification. The investment and turnover limits for MSMEs have been increased to 2.5 times and 2 times respectively. This will encourage scalability and technological advancement because they will have a lot of facilities. Besides that, we talk of renewable energy and solar energy. There has been increased budget allocation, subsidies, incentives. If I talk of capital gains reforms, there has been impact on long-term and short-term capital gains, which will turn out to be very positive for all of us. There has been a lot of startup support, AI funding, new funds has come out for AI-based startups. There was a much awaited taxation reform for individuals, and the government has responded. It says, we hear you. The middle class, the salaried class were under a lot of pressure, and the FM has responded positively by listening to them and giving them good tax benefits. Income tax relief, the thresholds have been raised to 12 lakhs annually, and adjusted tax slabs have been there, reducing the maximum rate of 30% to incomes above 24 lakhs. And for salaried individuals, this is 12.75 lakhs due to the standard deduction of 75,000. This is relevant and pertinent for most of us, and we will discuss this in detail as we proceed. If I talk of investment and infrastructure and capital investment, there is a record 11.21 lakh crore for capex, which is a 0.9% increase, almost a 1% increase from previous financial year's budgetary outlay. This, of course, will give a boost to infrastructure technology, particularly in states like Bihar and Andhra Pradesh. This will boost rural development and job creation, which is the need of the hour. If I talk of some other infrastructure allocations, Maritime Development Fund, 25,000 crores, border infrastructure, 87% increase in funding, allocation has been increased to 5,000 crores. Urban infrastructure, 1.5 lakh crores. Jal Jeevan Mission, this has also been extended till 2028 to improve water supply and sanitation. Of course, there are other sectoral initiatives. Manufacturing has got a lot of support. National Manufacturing Mission. Then there are various sectors like solar PV cells, EV batteries, wind turbines, which of course we will cover in detail. Solar sector has got a boost. Green energy infrastructure has got a boost. Electricity transmission, green hydrogen, they've all got boost. Insurance sector, the FDI limit has been increased from 75% to 100% now. This will attract more foreign capital. Overall, it is a very good budget and it will certainly give a lot of boost. If I talk of agriculture and rural development, high yield crop program targets 100 districts and it will benefit approximately 17 million farmers. Pulses and cotton production have also got a boost. Basically, I think this budget reflects the government's commitment to bolstering economic growth, supporting the middle class, and fostering innovation. If I can use one word, I think yesterday on one of the channels somebody had used the word pivot, and I really agree with this because it addresses concerns of growth rate, inflation, falling disposable income for salaried and middle class, job creation, infrastructure development objectives of our government. Actually, what is happening presently is that the global economy and its major players, including US, are showing signs of weakness. In this challenging environment, this budget is strategically aimed to put Indian economy and people firmly on the path to achieving Viksit Bharat 2047. Also, there is a promise that the new income tax bill that will be tabled next week will carry forward the same spirit of Nyaya. We are expecting it to be clear, simple, close to the present Income Tax Act, though 36%, though 60% shorter. Also, we expect that there will be tax certainty and reduced litigation.
So certainly, thank you, Shubha, for comprehensively covering every aspect of the budget and enabling our listeners to understand the highlights of this budget. Sector-specific, tax, everything you have covered very nicely. I would like to now move to Ashish. So Ashish, what do you say about this budget? How you find this budget from the perspective of a common person, from the perspective of the industry? What is your take on this budget?
First of all, I would like to say thanks to IMT CDL for providing this opportunity to speak about budget. So I've been working in IT industry, so I think that part is not yet covered. So I'll talk about IT industry. So first of all, I would say that this budget is not good for IT sector at all, right? So I don't see there is anything for IT sector. They have allocated 10,000 crore for private sector. So they should have identified that, okay, out of 10,000 crore, 5,000 crore is for IT and AI. If we talk about AI and quantum computing, so there is no allocation at all. And we are behind China and US. If we talk about like now India is like more focused on Make in India. That was the focus for China few years back. So now we are behind. So government should have taken this opportunity to invest more into AI models. If we talk about US has developed OpenAI, which is fairly very costly. Again, if we talk about China, so they have developed a model which is fairly cost effective. You don't need to pay, on monthly basis. It's open source, free of cost available. So now it's a challenge for US as well. If you can see the share of Nvidia or like other top tech companies, it has dropped sharply in recent weeks. And if we talk about DeepSeek, so it's very powerful, and any company can integrate it into their existing products, and that will definitely going to help them. And government has allocated a lot of fund in different areas, but they should consider that if they allocate those fund into AI, that will definitely gonna help all the sectors, right? If we talk about all the sectors, they are heavily dependent on IT. If we talk about the finance sector, if we talk about retail, e-commerce, everything dependent on IT, data science. So there, I mean, government should shift their focus to data science, AI, quantum computing. If I talk about quantum computing, right? If we use quantum computing heavily in healthcare sector, what will happen? So you can diagnose cancer and those kind of disease at early stage. So I would say that why we are not focusing on the current trend. I mean, we should aim to become the global leader in AI and quantum computing. China has taken that advantage. So I was expecting some allocation for IT. So they have allocated 500 crore for Center of Excellence. I mean, especially in AI. But I don't think that will going to help in industry because industry has been looking for experts. So if even if you'll train those some of the graduates and in AI, they will not be industry ready. I mean, they cannot work in industry. So they should focus on developing AI models, and they can employ, some private sector employees, or they can hire graduates so that they will learn practical, like how to implement that in different industries, and that will definitely going to help. So I think I was expecting a shift, yeah, but yeah,
Very interesting, and a contrary opinion, Ashish.
yeah,
So, but I would like to add that India is an emerging economy, while the China and US, they have been the advanced economies. Their priorities are different. We are different at the different stage of development. So, yes, but you have made this very interesting by bringing this contrary opinion. So, what do
yeah.
you say
So
on this? Anything
exactly.
from
So I
our
would like to add one more point here. So yeah, we are emerging economy, but this was an opportunity. We can say that we are global leader in AI because if you look into the jobs, so most of the jobs are in IT sector in India. So India contribute heavily in IT export. So they have technology. If we talk about TCS, it's one of the world's top companies. So I mean, or if we talk about Infosys, there are other companies, and even Microsoft will going to invest 25,000 crore in India just for AI. So I think government should have given some support to those companies like US did. They have invested $900 billion. It's huge amount. So
So, but
some
Ashish,
things should be allocated.
we are mainly export company. We have not built product until now, and
No, we are
unfortunately,
into products now.
it,
Sorry, we are into products now. Even Microsoft have developed a lot of product. They are gaming, and their R&D centers are in Hyderabad, and now they have established a new
correct.
center in Noida as well. Yeah.
They're all funded by JV, which the technology and a lot of knowledge comes from export. So US has always led. If you look at any product, even if it's Ola, we have copied Uber. It's the Flipkart, the Amazon is coming. So what I'm only trying to tell you is somehow the government had a tight hand right now. Not only doling out money, they had to manage fiscal deficits. So what they did, they picked up the low hanging fruit and
Yeah.
allocated the budget at this point of time. I think it from managing a country like India and managing budget and also ensuring that you follow the path of fiscal consolidation, because if we continue to do so, we will be in a position of a upgrade, okay, rating upgrade, and that happens. You see a lot of FDI and FI money flowing into India. I think, given the situation, it was a perfect budget.
And I would agree with you, Tanvir. And anyhow, government has to be enabler in this area, and the job lies in the hands of the startups. So I think that will be the best way to move into the AI and into the IT segment. So I fully agree with you, Ashish, also that the IT is the biggest sector which offers the employment. But yes, here when we talk about the innovation, the government is setting up the R&D innovation fund, and now the startup has to come forward. They're giving the initiatives to or the support to these startups.
Yeah.
I think Shubha will highlight this, that how much push has been given to startups. So I think that is more than enough, which
Yeah.
can be done in this direction, given the current financial situation of the country. So now I think we'll come back to this point later. And now I think we should move to very interesting and very important segment of this particular budget, taxation. So because everybody is talking about this bonanza given by the FM. So actually, what happened, Shubha, when we look at, my question is to you, that when we look at this budget, people say that 12 income up to 12 lakh is free of taxation, or if you're a salaried class person, 12.75 is exempted from the taxation. And then people see the tax slab starting from 4 to 8 lakh, 8 to 12 lakh. So what is this? Can you please simplify this maze of tax slabs for our listeners?
Yeah, actually, I think finally government has heard the middle class and especially the salaried class because all of us were under a lot of pressure. We are the highest taxable, segment of the population. And in spite of working long hours and putting in a hell lot of effort, we were paying taxes heavily. And the disposable income had to be increased in our hands because that in turn will increase the consumption, investment. And because once the demand increases, obviously there'll be more capex, by companies and all of that. So the FM's announcement regarding tax slabs for the salaried class, it is a significant shift. And there's a nuance to how it is structured. Under the new tax regime, income up to rupees 12 lakhs or 12.7 lakh, 12.75 lakhs with certain exemptions is almost tax-free. It's effectively tax-free because it falls within the standard exemptions provided for a large part of the salaried class. Of course, there are still intermediate tax slabs. So if I talk of the tax slabs up to 4 lakh, nil tax rate. 4 lakhs to 8 lakhs, 5% tax rate. 8 lakhs to 12 lakhs, 10% tax rate. I'm just reading out these tax slabs, just for our viewers' benefit. 12 lakhs to 16 lakhs, there is a 15% tax rate. And 16 lakhs to 20 lakhs, 20%. 20 lakhs to 24 lakhs, 25%. And over 24 lakhs, of course, you're in the high income bracket. So it's the highest tax, which is 30%. The government has more or less ensured that anybody who's, up to 5 lakhs, 10 lakhs range pays hardly any tax. It will be a very low tax bracket. So individuals earning up to 12 lakhs annually will not pay any tax effectively. Because also there's a rebate, 87A rebate is there, which has also been increased to 60,000 rupees for this financial year, which means individuals with a total income up to 12 lakh can avail of this rebate and their tax liability will effectively reduce to zero. Effectively tax-free in the sense that because there's a combination of exemptions, rebates, and a simplified tax process to make it easier for the salaried middle class. They will save more, they will invest more since they're bringing in more money at home. And as you know, it's a circular economy, so everything will depend on that. There's a progressive tax relief, and I think this is a very welcome step. And we were all really, waiting for it since many years now. So now I think, all the memes that people were making on tax brackets and, high taxation will sort of subdue.
Thank you so much, Shubha. Thank you for simplifying it. Tanvir, I would like to know from you, because this is a very important move and it will have impact in many areas. So like it will impact the consumable income, it will impact the industry income, they will be motivated for investments. It will also have, they're also working on the simplification of taxation. So what do you say? What will be the ripple effect on the economy and the people in general? So what is your take?
Great. Before I answer this question, ma'am, I'll just add to Shubha. She explained beautifully, but I'll just add for the sake of convenience for the overall consumer. See, what is this 87A 60,000 rupees? So if you look at the tax bracket, 0 to 4 lakh, if you're earning, you pay zero tax. Between 4 to 8 lakh, your net earning is 4 lakh and you pay 5%. 5% of 4 lakh is 20,000 rupees.
Right.
Between 8 and 12 lakh, your earning is 4 lakh again. You pay 10%. So 40,000. 40 and 20 adds up 60,000. So if your taxable income is 12 lakh, this 60,000 rupees, government is saying, I will take the bait. You will now not have to pay tax under 87A. So that is why it is 12 lakh has zero income. Otherwise, the tax slab starts after 4 lakh. So what it means is that anybody having an income on excess of 4 lakh rupees is mandatorily required to file the income tax return. Okay. And it is only up to 12 lakh rupees for non-salaried people, and salaried people with standard deduction 12.75. That bait of taxation is taken by the government and you don't have to pay tax. So this is what it is. And coming to the impact, when there is economic sense, when you actually have more money in hand, it increases your marginal propensity to consume and marginal propensity to save. Okay, so what will happen? So if there are couple working and both of them are having income of about 24 lakh plus. So each individual will be saving additionally from tax almost a lakh plus. Okay, so household get additional 2 lakh rupees to spend. Now they have a choice. They might be spending money on the household consumption, increasing the better lifestyle, which will again boost the economy, or they will invest the money in mutual fund or direct stock, whatever option they choose. In whatever form they invest, again, when they're consuming, they pay GST. In when they invest, they will paying STT. Okay, so it indirectly actually also benefits the government. So and today the government have been able to take this bold step of giving direct tax cut because the GST collection has had seen a robust growth.
Right.
Okay, so I think overall both it will ensure that the current lifestyle of people improves, and also the reason, I'll tell you one more reason which comes to my mind is, if you actually look at uh, the people at large, the unsecured loan borrowing had gone up for individual.
Correct.
Okay, it actually had hit almost 40% of the earning was going towards EMI. And that is why RBI cracked a whip and a lot of these companies last year, actually, because they wanted this could become another problem for the RBI to manage in time if there is a defaults there. So all those things playing together, the government has done a very good thing by actually cutting tax. So this will have three effect. One, people can repay the loans, they can consume more, they can invest more. If they repay, their financial situation gets better. If they consume, their lifestyle become better. And if they save, the future becomes better. So I think overall, it has a good effect on the economy, and indirectly, you will be contributing to the growth of the economy by paying GST or SCT.
Definitely, it will propel the growth, and people will be spending on the areas where they were not putting the money. Preventive healthcare could be one of the area where people put the money.
Yes, of
Which
course.
is very
Yes.
important, very, very important. And
Yes.
along with the insurance thing, so I think it will be a game changer, I think. So, Mr. Ashish, what do you say? So, what is your take on this taxation area? In general, how do you view this tax bonanza? And is there anything in the budget about the capital gain taxation, dividend distribution taxation? How this tax is going to affect the areas which are other than equity investment? Equity investment, with definitely, I would like to ask you what will happen, but what will happen into the gold, silver ETFs, the commodities, the real estate? So, what do you say?
Yeah. So if I talk about long-term and short-term capital gain, right? So I don't think that government has, done some changes in the tax related to short-term and long-term capital gain. And it was recently revised, right? For long-term, it was 10% and now it's 12.5%. And you can see the impact on the market. Like from last year, I don't think that any of the, large cap stock has given any return. So we can see there is an impact on the market. Now, if I talk about, long-term and short-term capital gain, like from 1990, 1946 to till now. So government has, removed those taxes, right? In 1940, 1991 also they removed these taxes, and again they introduced these taxes. So I don't know why government has not reduced those taxes in this budget. If I'll give you a data from like 2004 to 2018, so that time, capital tax was removed. So that time, if I talk about the demat accounts, so it was 66 lakhs in 2004, and it got improved to so like 3.4 crore demat accounts. So people were investing in capital market heavily. So if we talk about this budget, I don't think that market will going to improve anytime soon. If we talk about dollar, right, it's all-time high. So like investor will invest their money into US because they will get risk-free return. And if we talk about, FDI, so like all those, investment comes through Mauritius, Singapore, right? And I don't think that there are much for them in this budget, right? And if I talk about, let's say, other areas, for example, gold, right? So government will soon discontinue souvenir gold bond because they are facing issues. I mean, there are some budget issues, so they will going to discontinue that. So it's not favorable for gold bonds at well.
So when we are talking about markets and how it will impact the market, let us know from the Tanvir that what is, because you are working very closely with your clients to enhance their wealth. So how do you see how the market has reacted? This was something which I could not also understand, that it ended flat in spite of this bonanza budget. What
Okay.
happened and what is the reaction? How do you explain it? How we as an investor should navigate in this challenging, volatile, and complicated market? So what do you
And
say?
one point I also would like to add. I also took options yesterday in railways, but there was nothing for railways. I
So
need to, yeah.
Ashish has answered the question. I'll exactly tell you what happened. Okay. So it has three. You have asked me three questions. One is what is my outlook on the market. Two is why did the market did not react positively to a good budget. And third is how should people navigate the investment. So answer the first, I'll answer Ashish's question there, because with a good budget, so one, you should not overread one day movement in a budget day, because see, people try to take position before the budget is announced. Like Ashish is saying, he took an option on railways, hoping that there were huge capex going to come. A lot of people actually took a bet on capex and infrastructure, railway, defense, all those things. Okay, but the story was for consumption. Okay, consumption stock went up. So on that particular day, what would have happened yesterday? A lot of unwinding of position. So 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 if Ashish has bought positive options, he would sell the option on railways, right? And then somebody would buy FMCG. So that is why the market will react the way it is. Okay. So in short term, it is very difficult to evaluate a market, but this is one of the core reason why on a good budget, if this market reacts negatively, this is one of the reason. Okay, because people take contrary and the market is contrary to their expectation, then they have to unwind the position. That's one. See, my feeling is that yes, India has been facing a lot of headwinds at this point of time. One, because of slowdown. Okay, corporate earnings slowing down also. So these are two key reasons. And third reason was that the valuation was a bit high. Now, to a great extent, what has happened? The government has addressed a big part of the concern at this point of time by actually cutting tax, okay, and ensuring that consumption happens. Now, if I look at the corporate India, so until now, what has happened? Because of a free liquidity situation which evolved across the world post COVID, I mean, every Tom, Dick, and Harry company went through the roof. It went up. Okay. And to a great extent, it was even a company, not his words, was trading at a high level. So, what has happened now? And it was a quality company which did not go up very, very well, large cap and quality companies.
Exactly.
So, right now, if you look at that, what is the earning expectation of the market? The Nifty EPS earning expectation between FY25 and FY26, both together, yet put together, we are hoping that the collective earning growth will be 12%. That's the earning growth expectation. Whereas mid cap, the earning growth expectation is a little higher, about 20%. But the valuation of mid and small cap is very, very high. Okay. Now, but large cap is valued fairly at a good level. So what are the positive tailwind that could play out right now? Ashish rightly said, yes, the comfort. I don't look at dollar price standalone. What you should look at dollar index. Okay. The dollar index is trading at about 110. The comfort level for people is below 107. Okay. Now, if dollar index comes down to that level, then you will see some amount of FII flow gradually happening. And that will happen on account of multiple reasons, not only on account of India, but global parameters. What happened? Why did the FI go out? For two reasons. One, because the US 10-year yield went up. And if you're getting tax-free dollar return at 4.8%, why will you invest in a country which has risk? Okay. Two, China put a lot of stimulus So a lot of money got reallocated to China. Okay. So these are FI money. They are very swift and very fast to move in and out of the country. Okay. I actually interact with a US fund manager, and it is insane to see the way he acts. He one day will wake up in the morning and wipe out his position completely, and then come out and bang, we take a huge exposure. Okay. So this is how the FIs behave. Now, as an individual investor, we cannot behave like that. Now, I feel that the individual investor should be taking two opportunity which is coming in their way. One, sooner or later, the RBI will have to step in and cut rate. If they cut rate, your long bonds will deliver even double-digit return. Okay, that is one part. The bond exposure you can increase. Two, the large cap of the market is fairly well priced. Okay, and some of the good companies are trading at a decent valuation. So I think large cap of the market one can actually look at. Now, why I'm saying to build the position right now and gradually over a period of time, because it is when there are two things: valuation and uncertainty. When uncertainty is there, then only you will get a cheap valuation. When things get every clear out, you'll never get a cheap valuation. Okay, so good times we'll have expensive valuation, bad times good valuation. So this is the time that you should start building your portfolio, because what will happen when FI comes in, then it will not allow you time to build your portfolio. Then you will be buying at an expensive price. So it is before the flight takes off, you create your position so that you can ride the rally. Why I'm saying this? Because these are all short-term hindrances headway. It is like you're driving on a highway and one patch of land is not very good road, so you're driving slow. But you cannot stop the car, because thereafter the highway is very good. So structurally, if you look at India when compared to the peer group, like if you compare Brazil, Russia, Africa, Korea, any other country, we are not a single commodity driven market. We are a country with diversified industry, multiple opportunity, and across various sectors which we play out. So the long-term India growth story, I am very bullish on the long-term India story. And I feel that people should not panic at this time. Now, why I'm saying this? India is almost a 5 trillion economy. In the coming 5 years, what we have done in the post-independence in about 75, 76 years, now in the remaining 5 years, we will build the same amount of wealth for the country. So if you actually wait for timing the market, you might miss the bus. And behaviorally, what we have seen, if you actually miss a market, suppose at say at 25,000 Nifty or 23,000 Nifty, when it goes to 30,000, psychology will have a lot of roadblock for investing at that level. And you have missed a sizable part of the market. So what my only humble suggestion is, and I would end with a very famous quote by Warren Buffett, when the market is greedy, be fearful, and when the market is fearful, be greedy. So that's what be the message to the investors.
Yeah, very important and very valuable insights, Tanvir. And I fully agree that the time of making quick money are over. Now build the wealth. Consistently invest, be cautious, and invest into the quality stock. I think that is the key, whatever you have said. Out of that, I could cull out that. So I would say, my listeners, take this advice very sincerely. Be systematic in your investment. And there is a lot to be unfolded in the upcoming, in the coming minutes. So they'll be talking about a lot of sectors. So you can get a hint that where to invest, where to not. So because now I come to you, Shubha. So it is about equity market. What do you say? What is there about the bond market or the commodities market? How do you see this budget? What will happen in this area?
Actually, several measures have been taken, relating to this, also relating to bond markets, gold and silver ETFs, and the broader commodities sector, if I see. So if I talk of bond markets, the government overall has set a fiscal deficit target of 4.4% of GDP for this fiscal year, 2025-26. Why? Also because we want to reduce the debt levels. There has to be a controlled approach to borrowing. We can't just keep borrowing. And this in turn, usually, just like Tanvir said, it does influence bond yields. The budget suggests a modern increase in this market borrowing, and there will be a focus on reducing reliance on small savings. This, of course, will affect bond yields, potentially leading to a steepening of the yield curve. I mean, again, in consonance with what we just said. The introduction of bonds and credit enhancement, it will attract long-term investments. Pension funds, insurance funds, all of these will be coming in and investing here. Corporate bond market is going to go better. The customs duty on precious metals has been reduced, and also on life-saving drugs and medicines. This affects the cost of gold and silver, which is used in a lot in medical applications. So this is also like a positive thing for us. The government's tax cuts and regulatory reforms will boost the economic growth and increase disposable income, influencing investment patterns, including in gold and silver ETFs. I see an upside there somewhere. Also, there has been a removal of customs duties on waste, scrap, critical minerals. There is cobalt, lithium-ion battery materials, all of these. So all of these will be available at lower cost because of removal of customs duties, and they are highly used in manufacturing. So that is an upside. And there's also one more funding which is happening, which is urban infrastructure funding. So there's an urban challenge fund of INR 1 lakh crore, I think, to finance urban development projects. So this is how I see it going.
So, Tanvir, I'm coming again back to you because Shubha said that because of the government borrowing, the yield may be going up. While when RBI is cutting the rate, then we see that bond prices may be going up. So these are two opposite forces. How do you say? What is your take?
No, bond market will not go up. You see, the borrowing that government is doing is in line with last year borrowing also. Okay, so I think this borrowing is actually a part factored in the market already. On the contrary, if the borrowing would have been very high, if the fiscal deficit was very high, then see the fiscal deficit low, it means that the government is borrowing low. We were hoping that the fiscal deficit this time will be 4.9. We reported 4.8. And we are going to 4.4. So the government is doing a great job in terms of fiscal consolidation. The borrowing program is not very high. On the contrary, why the government wants to actually do away with the retail loan, the cost of retail borrowing is higher than the wholesale borrowing that the government does. Okay, so in no way that the government the yield will steepen from here. It will come down. Okay, and I will not be surprised if there is a cut in this February RBI policy. Worst situation in April, you will see a cut. The market is factoring at least 50 basis point cut in the coming financial year. Okay, so this will ensure that the bond yields come off. It's not going to go up from here. So, but this is from bond perspective. But even sector, if you're looking at some of the sector which is consumption driven, for example, retail, quick service restaurant, FMCG, paint, real estate, building materials, those segment will do well. Anything to do with consumption, consumer discretionary or refrigerator, all those company which ACs, those companies will possibly do well in this particular stream because of the increased consumption. I feel because when the interests go down, okay, the people propensity to borrow will also increase because the EMI comes down. Okay, and in that case, I think also NBFC will be positively benefiting. So is the real estate sector, but the direct real estate sector, some of the stocks are expensive, so one has to be very cautious in actually picking up those stocks. But yes, ancillary sector to real estate could be our tiles, or it could be our building materials, cement. I think could see an upside going forward in this year.
So a lot has been discussed about domestic market, but we say that Indian market is still, though a lot of retail investor, young investors have entered into the market recently, and still we say we are self-sustainable, but still the importance of foreign investor is too much in our market. So what do you say, Ashish? What is there in this budget for the foreign investors, FIIs, FDIs? How this budget is for them?
Yeah, so when we talk about FDI, so like you have seen the recent changes in insurance sector. So now government has allowed FDI to invest 100% in Indian insurance sector. So that will a game changer. So now if you talk about insurance companies, so there are 25 top players in the world. Out of 25, just five are in India. So there is an opportunity for those 20 players to basically, create a venture in India, and that will going to help all the customers, because policies will be more competitive, and they're going to get more, health benefit. And apart from that, government has done ease of business. I mean, they are going to revamp their policies so that it will be easy for foreign investor to invest in India, or they can plan to start new venture in India. So that is one thing. So they will going to revamp this bilateral investment treaty model, so that they have announced that. And apart from that, they have removed 7 tariffs, so that will also going to help FDI. But I have a mixed feeling that how it will going to work, because it's good for insurance sector. For other, yeah, let's see what happens.
So yes, there is a lot which will be unfolding in the times to come. So now
Right.
let us move to sector-specific impetus given by the government. So there is a lot of push, lithium-ion batteries, the basic custom duty has been removed on many products. What do you say, Shubha, on this, that how this budget is for solar, renewable energy? Uh, what do you say?
Actually, as
What
we know,
about semiconductors, electronics? What is
yeah,
it?
so as you know, globally, there's a lot of focus on climate change, sustainability. All of these companies, I mean, globally, all the economies are focusing on that. Now, of course, US has taken a little bit different path thanks to Trump. India has a net zero target of 2070, and we are very much moving in that direction. I see a lot of Indian corporates, I mean, on which, especially the listed companies, they have to come out mandatorily with a BRSR report as part of the annual reporting. And taking, of course, you can't just report bad figures. So ultimately, we have to come out with a lot of sustainability, ESG measures, and make on ground changes to the way we operate to reduce the pollution levels, to reduce the carbon emissions. And this not just has an impact on the environment, it also has a financial impact, because ultimately we are reducing the cost of energy by using more of renewable energy and being more efficient in terms of energy usage, using cheaper energy, renewable energy, and all of that. The budget is, I think, they've done a great move on this, and especially for the solar sector, it has got a good big boost also, because there's a target to install 50 gigawatt solar capacity by 2028. There has been a 35,000 crore allocation for solar energy expansion, and production linked incentive, PLI, what we call, for solar PV cells and battery storage systems has very much been there. This also will affect, the way we import from China, because from China we were majorly importing all of this. So this has all got a boost. In green energy infrastructure, there is going to be an expansion of solar parks and floating solar parks, especially in key states. There are new policies for net metering and rooftop solar incentives for residential and commercial sectors, which will further give it a boost. 100% tax exemption for green energy startups for next 5 years, and import duty relaxation on solar panels. Lowest GST has come in now for renewable equipment manufacturers to make solar cheaper. So renewable equipment manufacturers stand to benefit from that, and we hope they will pass on this benefit to the consumers. If I talk of green energy and green hydrogen, electricity transition and green hydrogen, government is subsidizing green hydrogen projects. This is, of course, to reduce carbon footprint, and 10,000 crore allocation has been done for hydrogen fuel research, fuel cell research. Actually, what happens is all this solar, wind, all this is going to be transitionary in nature. Ultimately, we all have to move to hydrogen, because that is going to be it's a much cleaner and much more effective energy. So a lot of research is also required, and a lot of it is going on internationally in this. Now, if I talk of semiconductor and chip manufacturing, there's a huge allocation which has been done to accelerate domestic semiconductor fabrication units, almost 25,000 CR, and incentives for companies setting up chip fabrication plants, because we all require chip in each and every IT segment, IT sector, and a lot of IT equipment. Chips are required, which we have been importing heavily, just like all the other countries. There are just a few countries which produce this, and it requires a huge capital outlay. There's also tariff cuts on semiconductor equipment imports, so that we just import the equipment and then we make in India, basically. Now, if I talk of electronics, there's a 15,000 crore additional funding to boost chip design and PCB manufacturing and assembly lines. PLI incentives have gone up, and there's a lot of R&D and innovation focus now. And just like Ashish said a while back, I think there's a research grant for AI and chip design and high performance computing. I think, Ashish, there's also a 5,000 crore research grant for this specifically.
Yeah, but it was not just for AI and quantum computing.
Yeah, so it's yeah, so all of those are falling in that bracket. How it finally gets allocated, see, it all depends on also how many people come forward to actually avail those grants. Budgets are one thing, but how we actually utilize them, and which sectors come forward, how the private sector also plays in is an important determinant of how effective any budget
Yeah,
is
if
for that
you
fund.
would have mentioned like AI and quantum computing, then there was a motivation for sectors to come up.
Yeah. Also, there's a semiconductor research and innovation centers
Yeah.
now, which they're planning to create at IITs and IISc Bangalore to develop next gen chips. If I talk of EVs and batteries, there are a lot of incentives now for EVs and promoting battery management systems, power electronics, all the electronic charging infrastructure, the ports, and all of that. PLI scheme extension has been given for lithium-ion battery production to support the EV ecosystem, which was very much required because EV, it's fine to make and manufacture and to sell also, but ultimately the customer is more concerned about how to port, how to charge, where are the charging ports. So we have to have a robust EV ecosystem in place if we actually want EV to take off in a big way. So this is also very important. And this faster approval process now they're planning up for FDI in semiconductor and electronics sector. And also electronics manufacturing clusters would be expanded. They're already there in Tamil Nadu, Karnataka, Gujarat. All of this will increase the I think the IT and the EV segment and make in India. One thing is that the price point of EVs is still very high in India, especially for consumers. It's in the range of almost 18-20 lakhs on road price. So we expect that all these measures put together in the next couple of years would reduce the start point, the entry point for EVs to a more affordable range.
Correct. So very true, Shubha. Government has clearly laid out the roadmap. They are being enabler by giving you various incentives, reducing the duties. Now it is on the private sector to take the maximum benefit of it. So if you're a producer, yes, it is the time to invest. If you're an investor, these are the sectors to be watched. And Tanvir, you have already shared your views about the consumable sectors, the consumer-specific sectors where this additional discretionary income will be used. But what about BFSI? Because you come from that sector. So therefore, I would like to know what about BFSI? Not much, but still.
Actually, see, you can say the glass can be half full or half empty. Okay.
Yes.
So the market was worried about two things. One was the capital gain tax,
Yes.
and the two was the arbitrage tax on arbitrage fund. So in those account, the government has not done anything. So for us, no news is good news. I think that is one positive out here. Okay. Per se, BFSI sector did not need any kind of a boost. Okay. So this direct tax cut will also give a boost to the investment segment. Okay. Plus, what is encouraging is that in this budget, government has allowed all those FIs who are investing money via the route, and if they want to transition from there to the gift city, what they said, there will be no implication of capital gains tax. If they sell here and they invest there, there will be no implication of capital. These are very welcome move. This will further ensure that we get more money via the gift city route, and the apprehensions that Ashish had that we will not get FI money. Yeah, it is time till the time globally things, because globally what we realize that if US slows down a bit, and these FI people are very opportunistic investor, they will try to park money wherever they see growth. And India, when you look at from the global growth perspective, is will be growing at a minimum of 6.5% real GDP, normal GDP of about 10.5% that we're looking at. But if you look at the next best is China, which will grow about 4.5%. So from a global perspective, we are on a very strong wicket. It's a matter of time that they'll have to look us. Yes, some of the other parameters will have to correct globally, which is not in our hands. So from a BFSI sector perspective, I think it is a very good time ahead. And these negative news not coming in is also a very positive news. I think overall, I would say still a positive step. And further, because fiscal deficit is under control, the NBFC and the lending business will also do well. Because if interest rate goes down, people's ability to borrow, because the EMI, they call DSCR, debt servicing coverage ratio, your EMI to your income ratio improves, and hence possibly you'll be borrowing more. So I think all this put together will be a good for the BFS sector.
Correct. So we expect more credit there in the market for every
Yes.
sector, either it be MSME or the housing or anything else. Right. So now let us move to the building blocks of India. So, and we call it vision of India. So how do you see? We see the key sector, any advanced economy, you will see that they invest heavily into the education, health. So these are the building blocks of the economy. So how do you see, Shubha, this budget, if as far as education, skill development is concerned?
Actually, what happens, Preeti ji, is that we have a huge, huge human capital. Okay, but whether it's sitting on the asset side or the liability side of the country is really to be seen. We have a huge base of also educated people who are employable, but whether they're doing any real value addition and what is the quality of the human capital will ultimately determine where this our country will go. Okay, so it's not just about doling out degrees and getting everybody into school, but also giving them a very good quality education. The union budget has endeavored to address these issues. There has been an Atal Tinkering Labs expansion, establishing 50,000 Atal Tinkering Labs in government schools over the next 5 years, because the aim is to foster innovation and critical thinking, not just mugging up the syllabus and you know um, ratification and all of that, but actually thinking and coming out with innovation, which is very important. Our education system really needs that. Then there's a digital divide already. So rural areas need better broadband connectivity for rural, for better educational resources and online skill development programs for grown-ups also. Also, there's one more initiative which has been taken, which is Bharatiya Bhasha Scheme, in which digital books will be provided in various Indian languages so that everybody can understand, irrespective of the language barrier, the English or Hindi or whatever that is being used. And like Ashi said, 500 crore has already been allocated for AI centers. This will also be towards education. And there's a PM Shri scheme, Pradhan Mantri Schools for Rising India scheme, which is focusing on upgrading over 14,000 plus schools to exemplify the national education policy, which had come out in 2020, about 4-5 years back. So we're expecting that with all these measures and all this outlay on the ground, the people will not just be educated but also employable and drive economic growth through their innovation.
Yes, definitely. And they've worked on all the areas, primary education, secondary education, broadband connectivity, even in the higher education, increasing the seats into the IITs, medical, even increased funding to IIMs.
Yes, I think almost 33% seats have been increased in IITs and also in, for the medical students just recently.
Yeah. So how do you rate in general this budget on a scale of 1 to 5? What is your take?
I think right now, this is the season and everybody's in the business of rating budgets these days. It is very difficult, but okay, I'll try to, this is my small take, but I'll cover it according to the key aspects. So if we speak about economic growth and infrastructure, all the discussion which we've already had, I would rate it 4 on 5. Education and skill development here, 4.5 almost out of 5. Healthcare, we have not been able to cover it in detail, but there is a lot of impetus on healthcare, and especially because import duties are being done away on a lot of critical medical supplies. So 4 on 5 again. Sustainability and environment, because being a compliance professional, I do think of those things, and we are trying to reduce our carbon footprint. They're also a good outlay. I think 4 on 5 on that. So overall budget, if I think of budgeted figures and everything, and the thought that has been put behind, very, very crystallized thought, that the FM and her team have put together. Overall, if I have to rate this budget, I think 4 on 5, certainly from my side.
Great, great, great. So, Mr. Ashish, the another building block of the economy is healthcare. So, health, infra, these are the things which, like, if you say infra, it gives the push to the entire economy. If you talk about the health, it is something which very, very important, right? So, how do you see this budget on these aspects? Does this budget adequately address these areas?
Yeah, so if I talk about healthcare, yes, government has, reduced the taxes or like exempted six like say life-saving drugs. So this is a, great move. Uh, and I think it will definitely going to help in healthcare industry. And this is one part. And I was also expecting some change, Ayushman Bharat. So, but there were no changes in regards to that. And if we talk about infrastructure, yes, government have been spending a lot of money in infrastructure. They are going to improve road, railways, and all. I think in infrastructure front, it's fine. Yeah. And in healthcare, I would also like to say one thing, uh, if you will see that Indian healthcare, like it's comparatively cheaper compared to other countries in the world. Actually, it provides healthcare treatment in 1/10 of the cost which other countries, are basically taking for the same. So I think government should more focus on healthcare sector in future as well. Yeah. And if I rate budget out of five, so for me it will be like I'll say three.
Oh, true. So, because yes, I can understand this because IT, yes, you want that there should be some lot of work in the IT area, that which is one
Right.
of the biggest employer in the country. Yes. So, Mr. Tanvi, now I come to you. How do you see how the budget has fared as far as pre-budgetary aspects are concerned? And so, what do you say? And how do
I
you rate this budget?
I think, given the current situation, the budget collectively addressed both growth as well as fiscal prudence. I think they have addressed it beautifully here. I don't think so. Could have been done anything better there. So from that perspective, yes, it is good. Now, for keeping fiscal deficit low, they have marginally cut down on the infrastructure spend, which is government expenditure, but that's well understood because last time also, if you look at, like Shubha said, the we have grown only 0.9% from last year infrastructure budget, but actually the growth is 13% because whatever we had budget estimate last year, the revised estimate was lower than that. We spent lower than that, is why the economy slowed down a bit. So keeping that in my mind, I think a decent allocation there also could have been a little bit more, ye dil mange more in a way. So I think uh, on a over score, I would rate anything between 4.5 for this budget.
Great, great. So I think we have gained a lot from our experts. Thank you. So it is the time, though I don't want to call it a day, but yes, the time compulsion is there. So we have gained a lot of valuable insights from our experts. I think my listeners are fully with me, and for them it has been a valuable session. So it is the time to say thank you. Thank you to my uh, experts. Thank you for being here and enlightening us with the budget highlights and with your expert advice.
Thank you so much, ma'am.
Thank you.
Thank you.
It's been a pleasure.
Thank you.
Bye. Bye. Thank you, everyone.
Okay, goodbye. So,
Bye.
and wish you all a happy financial year.
Thank you. Same to you, ma'am.
Thank you. Thank
Thank
you.
you.